let's get to video 2 of 3 with DXCM. I don't know exactly the company. The P&L looks okay on the quarterly basis. Maybe they're starting to show some cracks in the business. I don't know. Monitor that. Meanwhile, 124 zone, so that's plus or minus $1, should be a lot of resistance. You can see it. I'll put a line to give you the visual. That one tick at 122, that neckline. So if you come back into that neckline, plus or minus $1, should be resistance, the whole zone. So it starts, in fact, at 119. So you better not lose 108 before you take that area out. Otherwise, you get to this zone. This is just charting comments, not fundamental comments. Okay, let's zoom out a little bit and see how that stands. That looks pretty good. Look, I just made comments that are totally consistent with prior comments. 113, 114 needs to hold. So they need to get back up here. Those were the comments. And if you do lose 113, you're probably going to come to this box or lower. All right. End phase. I wouldn't touch this with a 10-foot pole. Folks, look at the P&L. You know how I say trade facts? Okay, not what you think of price ranges. Trade facts. Look at this P&L. If you can explain to me how the stock can lose sales from revenues go from 711 million to 260 million and the stock price is still not at a new low, I would like to see who's doing the math on this bad boy. Like on Wall Street. This doesn't concern anybody? Nobody? Like less than half in sales from just 8 months ago, 9 months ago. Wow. Is it cyclical? I don't know. How could it be? So let me pull it up. I mean, there's a mathematical conundrum here, folks. You should look into it. This could be wrong. There could be something wrong in it. Trailing 12 months. Let's go to an annual. So let's see here. 2019, 600 million. 700 million, 1.4 billion, 2.3 billion, 2.3 billion, and now 1.8 billion. Trailing 12 months. And that includes 2 big quarters. So 1 big quarter. Anyway, it's concerning. Support-wise, everything below here is support. So if you're taking along from an investment perspective, I get it. From the charts perspective, but from an investment perspective, I want to push back and say, please do homework. Find out how you can explain this deterioration in sales. Technically, it's falling into a support zone that extends through the low 80s and high 70s. Energy transfer partners. And okay, stable business, trying to break out. They averted disaster, and they have support. So they have support as they approach 1570. They have an opportunity at a new high. You take out 1650, I don't know, 50, 80 cents can ensue. Is this an all-time high? No. Okay, so that is an end zone for me. Anything approaching 19, exit, exit, exit. That's me. Who is this? Fidelity, Wise, Origin, Bitcoin Fund. What is this? Yeah, everything I said about crypto on the first few slides, I say here. So technically, yes, it could bounce 252, but like I said, if Bitcoin doesn't bounce, it's probably going a lot lower. So this could be in the 40s, low 40s. Yeah, I don't know. If I'm investing in crypto, I want something that is crypto. But this, I guess, is a proxy. I don't know much about Fidelity's Wise, Origin, Bitcoin Fund is. Let's see here. It intends to provide accessibility to Bitcoin without the complexity of acquiring, holding, and trading. But you defeat the purpose. The purpose of owning crypto is you you have assets that are not under control on anybody. So anyway, not for me, but everything I said about Bitcoin applies here. FCX, this is the exit zone for me. Stable business, acts like it's Tesla. That's crazy stuff right there. Between here and 53, it has a lot of resistance from this cluster that it's just trying to recover. So dips into 49.50 would not be that crazy. Okay, Flex. Hold last week's lows or come down to 27.50 or 27. If you rally into 31.50, you're going to be facing a lot of sellers potentially. You can rally to 31.50, but that would be an exit zone from a trading perspective. FXI, I shorted it and made money with it. Do I want to short it again? I forgot why I shorted it. Probably not. I don't want to deal with Chinese stocks. FXI above 27.10, 27.20, it could go to 28.40. So technically, I see the attractiveness. You have support below and opportunity above. However, if you do lose 25.80, you're probably going to 24.40. Gold, I don't know if you meant you wanted to see this gold or gold, Barrick Gold. I'm going to go to Barrick Gold. Exit zone. So Barrick Gold was a long. It popped up. I never did go long it. Good company, good managed company, and it's going into a prior sale. If I'm an investor, this is not an obvious place to load up, but if I wanted to get engaged, partial position, that's fine. I would leave room to more than double it if it hits the skids. Anytime it falls below 16.40, it would be attractive. Anything close to 15, be super attractive. Oops. Helen of Troy. What does Helen of Troy do? Manufacturing, distribution, personal care, and household products. Here's another conundrum. First of all, earnings in 2 days. It doesn't matter what I say. Second of all, business so stable. Why is it falling off a cliff? This is a chewy situation. If I haven't gotten out yet, I wouldn't get out here. To be honest, if they lose 80, good grief. Where are they going? 20? Maybe it's a long because it's so bad, it's impossible. Like, what? I'm intrigued. I'm going to add it to my watch list and see what's going on with that thing. Yeah, you have an incredible support, but if you lose that incredible support, I don't know where the bottom is. Hymns, I do love the business, and it looks like I'm not the only one. Not an obvious point to load up, but look at this P&L. They have recurring business revenue. So technically not pretty, but if you take out 25, I mean, the moon, it's a moonshot. If I have positions, I sit on them. If I want positions, I would sell puts, buy calls, like a stock alternative strategy. Hood, pretty crazy P&L. I was involved with the stock at one point, and I got out and never looked back. So you do have a catalyst above 24 and support into 20.5. And I could explain how it can come down to 18 or go up to 30. So wherever you feel it's going to go. Let's see, zoom out. For me, 27 matters and 33 matters. If you're long and this brings you back to profitability, maybe you lighten up a little bit. You have to admit that the P&L is not pretty. Am I right? Yeah. So make sure you're in it for the right reasons. Intel, make sure you're in it for the right reason. Look at that. I didn't even notice that Intel had a good day. 2.5%. Look at that. Things are so good, even Intel is green. So from an investment perspective, I stick to the fact that this one could be something I would own for a long term. The only hiccup is that everything that smells like Intel is high after high after high. The whole market is high after high, and this one is low after low. So, but it's a good investment for a turnaround story. It is still a beast. So if somebody's long, I get it. If somebody's trading long here, this is an exit point. It might come back down to 31.30, 31.40. Then it would be better. ISRG, good company. I would buy the dip. Look at this. This is a target. I don't get long stocks that are going at targets. Look at this. That was the forecast, and look at where they're at. This was the target, and look at where they're at. Two different reasons. So buy the dip, folks. Why now? Great company, but buy the dip. JP Morgan, you saw me shorting it, and I think we started out on a good note. It is, I bought puts and I shared, and the puts are working from day one. So I'm in puts. That should tell you what I think of the chart. KHC, Kraft Heinz. This is a Warren Buffett type company, I think. Maybe, maybe not. Support. That should bounce to 35, 36. If you lose 30 and a half, 30, you probably go to, I don't know, 27. How about 28? 28 and a half. Am I through the earnings? I don't know. The good question. So they're asking me, will I be in a put through the earnings? Probably not. I would hedge. So if the put is profitable, I will exit. I will look into the options data, and if I stay in puts, I would buy a call to hedge my bet. Yep. Good point. Thanks, Brad. LULU, come on. Oh, that's new. What just happened? Okay. That's new. Completely reloaded the whole program. All right. LULU. Yeah. So here's another company that does well, and the P&L does not show a lot of cracks. One back quarter. It depends heavily on retail, and it's big ticket item. So the stock has fallen into pretty good support. Anything between here and 230 is 250 is a buy, right? So I would go long cautiously. So I would have the courage to sell a put to own shares partially, to sell a credit put spread, all of those. Debit call spread, maybe. That's my least favorite. And so from a chart perspective, it doesn't show a lot of weakness, except for the fact that it's weak. Everything about it is weak, except, it's not outrageously priced. But don't argue with Wall Street. So here's the risk. If it gets to 290, it probably goes to 250. It's tradable. LYFT. This is a target. See, these are my marks. I didn't do them after the fact. I don't remember doing them, but I don't usually do them after the fact. Once they lost 1550, this was the target zone. It's a zone, so it could extend through 12. Everything below here should be a struggle for the bears. The easy bearish action already happened. Now, rallies into 1550 are reasons to get out of it. This is a horrible company to invest in. Make sure you know their mission statement and all of that. I say horrible company because management has showed me some cracks that I hate. Like some comments. One time they blamed the quarter on bad bicycle or scooters. Something with the scooters or the bicycles. I was like, are you kidding me with this comment here? Anyway, so you got to ask yourself who's in charge of that company. Mara. Is this a Bitcoin company? It is. So explain to me what the heck's going on in the P&L. I actually, you don't need to. I wouldn't touch this company for my own self. But do your homework, because when you have 2 quarters where the earnings are bigger than the sales, so your net income is larger than your sales, just make sure you know what that's all about. How could that physically happen 2 quarters? Okay, so this some bizarre stuff right there. So it's not about the P&L then. Make sure you know what's going on with the company. Charting wise, you have a zone of sellers at 24 as you approach 24, a zone of buyer as you approach 16. You're right in the middle of that zone. You get long, you're guessing. You get short, you're guessing. If you're an investor for the long term, it looks like this one is just you buy some and you wait for a debacle and you add some. Not an obvious entry point, but if you're an investor, you don't need an obvious entry point. You just need to leave room to add a lot more when you do get an obvious entry point. Meta, finally, it's catching up again. So it made a new high, I believe, but it was lagging for the longest time. It was like, what's going on with Meta? And last week, boom, Friday was huge, right? Yeah, 6%. Anything happen? No. Look left, this was a target from way back, and then they fell apart. So Meta could be at 600, could be at 400, I have no idea. As an investment, the company is cranking the dollars out right now, and then they tell us they have a source of income that is not even ready to make $1 yet. So imagine when they open the metaverse. So maybe this rally is because somebody knows that they're going to announce the metaverse front doors opening at some point. It's splitting? Meta splitting? Or are you speculating? Yeah, anyway. That was not a fake. Okay, so can you answer me yes or no? Is it splitting or not? Oh, moving on. All right, Meta is not for me up here. Monster. Lower lows, lower highs. You better not lose 47. I don't know where you go. I think you lose 40 if you lose 47. 40, 47, 48, 45 has been contested for a long time. It should serve as support. Now, the problem is that rallies into 52 are going to be met with a lot of sellers between 52 and 54. This box that was a target that they finally came into, they bounced off of it, fought over it, and lost it. This box is going to be a huge problem over here. So what I can do is I can do this. And you can continue drifting lower. At some point, you hit a floor with valuation. I mean, this P&L is not that bad. Microsoft, not for me up here. I don't know what you're asking here. So if you're sending this comment to say, hey, can I buy Microsoft for the long term? You don't need my permission. Yeah, of course, you want to have Microsoft for the long term. Why now, though? I don't know what else to say other than that. Why now? If you can convince me why now, then you don't need my permission. You're not going to be able to convince me that now is a good time to load up, but you don't need my permission. You have your mindset already. Great company. The best company on the planet, but not for me up here. Micron. Die, Micron, die. I'm very intrigued to see if they can deliver on their promise. I'm highly skeptical of all the exuberance that's been priced in. I'm very happy to see it have a trend, a lower high trend. At least there's some logic pouring into this market. The way it was rallying harder than NVDA at some point a couple of weeks ago, was bizarre. And now it's coming back to reason. So if they lose 126.5, 127, it's a big if. But if they do lose it, this thing goes down to the 115 zone. And if it does, that means the bloom is off the rose, as they say, I think. And but in the end, they have to show that the last 2 quarters were not flukes. If they can maintain that, then they will make a believer out of me. I push back. They did improve the gross margin. It's no longer negative. At least last quarter it wasn't. If they can make it on a year, an ongoing thing, that okay, they're not going to lose money on every widget they sell, then I'll be a believer. Until then, I'm skeptical. Support, yes. Load up, no. Tradable on the long side, yes. Resistance 139 or higher. I made comments about investing and comments about trading on that one. Netflix, just like Microsoft, just like Meta, great companies. I really want to ask, when you send me the question about Netflix, are you looking to short it? Pick somebody else. This P&L is solid. The content is solid. It is the best streaming platform out there, and I use a bunch. It's the only one that actually doesn't crash every 10 minutes and doesn't lag. It's still crappy. With all this AI around here, why do I have to keep seeing the same stuff that I've seen before? Like, I remember Kramer back then when I used to watch CNBC used to say, how do you know me so well? Well, I push back. If it knows me so well, why doesn't it know that I've seen this show, and why do you keep showing it to me and don't give me a button that says, please don't show me anything I've seen in the last 2 years? It is so annoying to see everything that comes up that you've seen already. It's very bizarre. I don't even have the option to say, don't show me this movie ever again, which I've had in other platforms. I think YouTube gives me that ability at some point. Gave me that ability. Okay. Technically 655-ish would make a nice buy to dip. And then if that happens, then the rally into 680 would be questionable, and it would be a bounce to trade out of. For here, I wouldn't take any position. If you twist my arm, you say you have to be long, I would sell a put to own shares like 25% below. Wouldn't even look at it again this year. Nike, I would take a position in Nike for a starter position. I say that because there's nothing wrong with the business. The CFO just spooked everybody. And I'm sure the stock can go lower if the market's correct, but it's in the pandemic levels. So it's at levels where Nike was when the world was shut down. So I would own it here and break even in the low 60s, no problem. ServiceNow, P&L not any better than Nike. They can't stop buying it. Okay, so if I own this, I would sell this and buy Nike. If I'm a long-term investor, I would roll out of a stock like this into something like Nike. Now, having said that, above 820, open season, and it's a broadening wedge, and the wedge can go $100 or more, $120. So if this breaks out, they can go to 925. Nucor, no. NU Holding. We discussed this. Pretty sharp rising wedge. They just broke out of an all-time high. That's a phenomenal statement right there. This could be the target of a breakout. Yeah, this is a target of a breakout from around here. So kind of like the market. So I feel like this will go by way of the SPY. If the SPY continues on higher, this can creep into 15. If the SPY has a 5% retracement sometime next decade, it seems impossible right now. Like, why would we drop 5%? Just think about that statement from a global perspective. If you can't justify 5% in 10 years, that's a pretty bullish market. So anyway, they're buying dips. A dip to buy, I think, into 9 would make sense. Into 1050 for a trader, 9 into an investor. NVIDIA. Okay, so I'm going to keep the spotlight on NVIDIA. In fact, that is a pivotal stock here. NVIDIA made the market last year in May. NVIDIA reaffirmed the market this year in May. NVIDIA is the market. If that statement is correct, therefore this week, the most important stock is NVIDIA. Can they get to 134? Because if they can, they're probably going to get to 150 in the next couple of months. Or are they going to lose the support they just bounced off of just a few days ago at 116? In other words, this white path is still in play until they take out that red line. The white path is still in play until they take out that red line. And I would try to short it at 136. Once they get to that yellow box, it would be a short. Maybe short the market. So let's say NVIDIA does follow the white path. What happens to the market? My contention is that the market will lose a huge wind. Oxy. If you've been with me for a while, this is a fun stock to talk about. I was right. A lot of resistance inside that white box that I drew. So anything above 63.50 is not going to be easy. And if it does come, I would exit the stock. Warren Buffett owns it. Yeah, Warren Buffett doesn't own it to make money off the stock. He wants to put the cash flow on his P&L. So that's why he owns it. Don't trade like Warren. You're not Warren. Wake up, people. Wake up. Warren Buffett is a whale. You can't trade like a whale. Okay, 64 can give you 66. Losing 59 can get you 57. Trading comments versus investment comments. Okay, let's go to investment comments more so. P&L is meh. Technical term. Palo Alto Networks. Again, what's this? Did they win a lawsuit or something? What the hell is this? Anyway, Palo Alto Networks. I don't like to go long a stock that's going into a massive fail. This is an exit spot for me. Yeah, they're trending higher, but I would buy the dip into 310 or lower. And with that, we end video number 2.